and talk about Max Estates, which is listed at 298 rupees per share versus a discovered price of 216 rupees per share. Remember, this is after the merger of Max Ventures into Max Estates. So Max Estates will be solely focusing on the real estate business now. So to understand more about the group, how things are going to look going forward, we're joined by Sahil Vachani, MD and CEO of Max Estates, to take some questions. Sahil, thanks a lot for joining us. This is Pavitra. First, if you could just explain the group structure to us now that this has happened. What is it going to look like? What comes under Max Estates? If you could just take us through that.
Thank you, Pavitra. The structure is very simple. Max Estates is now listed as a pure play real estate development business. Our real estate development business is now housed under Max Estates. We are
Okay, looks like we have some trouble with that connection. We're just going to try to re-establish that. But that is Max Estates currently at 283. The discovered price, like we told you, was around 216. So it is well above that, around 30% above that price as well. But I think Sahil is back with us. So I'm going to try once again. Sahil, you were telling us, what will come under Max Estates. And we also want to know, where does the facility management business really go? I mean, where is that going to be housed?
Thank you for having me here. Max Estates is going to be the pure play listed real estate business for the Max Group, where we are focused on the National Capital Region. We have two asset classes, office and residential. We already have 8 million square feet under development and in development, and we're looking to grow and scale this more. The facilities management business is Max Asset Services. It is a subsidiary of Max Estates.
Okay. And what's the size of the facilities management business? And in our last interview, you told us the company had pumped in, or you had pumped in about 1,500, 1,600 crore in Max Estate, in the real estate business. Do you plan to infuse some more money?
Yes, so we have put in about 1,600 crores of equity into the real estate business. We're looking to scale our residential business in times to come. We've already deployed this across the existing capital has been deployed across the commercial and residential businesses. In addition to that, we have also raised 800 crores from our partner, New York Life Insurance, at the SPV level for our commercial office projects in the past few months.
Okay, so give us a sense of some numbers that'll give us an indication of the size and scale you want to get to, say, over the next 1 to 2 years. You said right now, I think 8 million square feet is in the development stage, right?
Yes, that's correct. And just to break that down, we've got about 4.5 million square feet of commercial office space, which once fully developed, of these 3 buildings are developed, so close to 2 million square feet is developed. Another 1.5 million square feet is under construction. When it's fully developed, we will have a rental income portfolio of close to 500 crores per annum. In addition to that, we have already 3.5 million square feet of residential space. In that, we've sold 1 million square feet 2 months ago with a sales value of 1,800 crores. Another 2 million square feet will come in to sales next year, which is in the calendar year 2024. And subsequent to that, we are continuing to look at more growth opportunities in the residential space as well. So to put that in perspective, this year we've done sales of about 1,800 crores. We anticipate to clock better next year. And in combination to this, along and continuing a residential growth business, we will also have the commercial rental portfolio business, which should, on a full-blown out basis, be able to give us 500 crores per annum of rental income. In addition to that, we have the asset services business, which hopefully should be around 200 crores of top line of facilities management of just our own existing developments.
Okay, so if you do a sum of parts, then what kind of top line does that give you, say, in year one? 1 year down the line, if I talk FY25, then what's the kind of top line and what's the kind of growth run rate you are hoping to clock when you put all of these parts together?
So if you look at the real estate space, we will have two separate buckets. One is the sales and the recording of that sales on the P&L and balance sheet actually happens when we deliver that project, which is going to be about 4 to 5 years from now. So if we were to track sales, we've already done 1,800 crores of residential sales this year. We anticipate to grow that to 2,000 plus crores next year. That's just the residential sales. we have 100 crores of rental income currently, which will ramp up to about 450 crores over the next 3 to 4 years.
Okay, Sahil, just a little bit more on this expansion that you have been talking to us about. You are in the NCR region. Is all of it going to be focused in the NCR region? And also, what is your target sort of commercial and residential real estate split?
Yes, we are continuing to be purely focused in the National Capital Region, which is Delhi, Noida, and Gurgaon. Currently, of our 8 million portfolio, we're about 50-50 split broadly. So it's half of it is office, half of it is residential. Moving forward, we're looking to grow more on the residential side in the coming years as well. In addition to that, we also have our bid that we have put under the insolvency code for our insolvent asset, which was called Delhi 1, which is in Noida, and NCLT has ruled in our favor for about 3 million square feet. That is going to be a mixed land use development that is going to come into play as well. So our growth is primarily going to be in NCR as we speak, and about half between office and residential.
Okay. When does Delhi 1 contribute to your top line?
So we are awaiting final approvals from NCLAT and from the regulatory body. So it's difficult to comment on timeline, but it is definitely a strong pipeline for the company in the years ahead.
You said facilities management business has revenues of about 200 crore, right? As of now?
It will have 200 crores on a full blown out basis once all our portfolio on the commercial office space is also developed, which will take another few years to come.
So today, what is the revenues from the facilities management business? And margins typically are low.
That's right. So just the facilities management business is a very small part of our overall rental income portfolio today. We have just about 100 crores of rental income. So facilities management is a very small part of that.
Okay, so facilities is a part of the 100 crore of the rental income that you're generating today.
Correct.
But going forward, the rental income revenue will rise to 500 crore, and of that, 200 crore will come from the facilities management business. What are the kind of margins?
The rental income per se will be about 500 crores for the full blown out portfolio. In addition to that, we'll have a facilities management income of about 200 crores, which is traditionally a low margin between around 15% or so.
Okay, and when you say on a full blown out basis, we're talking 3 years, 4 years, 5 years down the line. When do you think? 3, 4, 5?
That's correct. 3.5 to 4 years, because we have started construction and development on 2 of our asset developments, which is a 1.2 million square feet new development in Noida in sector 129 and a 1.6 million development in Golf Course Extension in Gurgaon.
Sahil, we'll leave the conversation here for now. Congratulations on a pretty strong listing. That's Max Estate for you, the real estate business arm of the Max Group now.